Hello, good evening. It's Adil Fazal here, market analyst at cfds.com. Be sure to visit www.cfds.com for your trading needs, and there is the ability there to apply for that 25% bonus offer. Alternatively, you can visit the educational website www.cfds.education to certainly learn more. Okay, this is a market wrap-up of the European indices on the Tuesday, the 8th of December 2015. Okay, in terms of US markets, because obviously they will dictate the futures and the direction of European indices, it's certainly bullish given the fact that we've got obviously attempted to go and close that gap below, and that certainly seems to be out of the equation now. You do have inverted head and shoulders formations on all US indices now. You have this left shoulder head that's been put in, and obviously we made a higher low, and you are looking for potentially closing that gap and potentially thrusting higher as well. So certainly bullish from my perspective, especially given the fact that the daily chart has put in a bottoming tail on the S&P 500, and therefore that's bullish going into, well, certainly going bodes well for European indices going into tomorrow. Okay, daily chart certainly is holding that bullish engulfing candle in the registered on the 4th of December, and therefore the bulls are in control. In terms of the European indices, shall we say, we had Mr Weidmann, who basically always is hawkish, and he certainly sent the euro higher, and that obviously caused the actual European indices to certainly come under pressure. You can see here, daily chart certainly is consolidating in that upper 25% of the candle. 4-hour chart itself consolidating off that 200 MA previous resistance equals support. I will stop out on the euro in -30, which really is annoying to a large extent, given the fact that I did expect a weaker euro. Okay, especially given the fact that the Aussie and the Kiwi were certainly being hammered. Okay, so the euro itself, especially after Mr Draghi's speech in New York, etc., his commitment to more QE, blah 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 blah. And now the euro itself has hit a pivot high of 1.0903. Stop loss hunt seemed like at the main psychological 1.09 barrier, but has subsequently fallen back. So you are seeing a resistance being held. Okay, so on the 60-minute chart, you're certainly seeing resistance being held in that topping tail, and therefore looking for further weakness, and that should send the European indices higher as well, from my understanding. Although the US data certainly hasn't helped, given the fact that French data exports certainly came in line, if not beating in terms of imports. The UK data mixed. Certain parts of the data, manufacturing production, month on month, came out worse than expected. Year on year, certainly worse than expected. Industrial production actually came out stronger. European GDP came out in line. No real surprises there, but we had the Red Book certainly weaker. We had JOLTS certainly weaker. And obviously the economic optimism was slightly better. So overall net US data was slightly weaker, and therefore that helped the Euro USD certainly push higher, and the Aussie and the Kiwi certainly have started to thrust higher based on that as well. Okay, now the euro itself, as we all know, it's a QE. It's all about QE, and it's a QE trade, and that's all that dictates its market at present. So it's all about the euro. Now the euro has put a potential top here at 1.09 intraday, and you are looking to test this 1.0860 level again, and that should obviously send European indices higher. Okay, that's my theory and that's my thesis. Currently 93 points for the week. It has been a roller coaster thus far, certainly hard, very tough, but that's the market, folks. That stop loss is there to protect us if we're wrong. Okay, now let's have a look at the actual setup now in terms of the technical setups in the European indices. Now Euro Stoxx at present has hit previous resistance equals support. That bottoming tail has been tested post Draghi. Obviously Draghi's damage control, you have this inverted head and shoulders, so my bias still remains bullish. Okay, my current active trade is currently long Euro Stoxx at present, and I'm looking for 3320, 3330 later on today. Okay, 60-minute chart, we are hitting that double bottom. Okay, we have the bottoming tail going in as well, and therefore even though we did have a weak close, I am expecting a thrust higher back up to this 3400 region. Okay, that certainly is my bias. The 10-minute chart on the actual Euro Stoxx, you have an inverted head and shoulders formation, hence my bullish bias, and I am looking at potential rally here. So you have the first resistance at 3320, where previous support equals resistance. You have horizontal resistance at 3350. So they're the zones that I'm looking to target. Okay. Now, in terms of the other alternative indices, you have the German DAX. Okay, popular indices, again, horizontal support. You are into support on the German DAX, and therefore I'm looking for a thrust higher. 60-minute chart, you have a bottoming tail, double bottom. It has been put in, and we are looking to test this 11,000 level again, from my understanding. 10-minute chart itself, again, you have this inverted head and shoulders formation. You can clearly see this, very visible. Left shoulder obviously has been put in. You've got your head that's been put in. You're looking for a right shoulder, and you're looking for a thrust higher. You have a bearish channel, therefore you are looking to break out of that. looking to retest, put in a higher low, and off we go to the races, okay, in terms of the price action higher. Okay, so horizontal support or double bottom support has been tested, and it certainly has passed the test from my understanding. Okay, in terms of the French CAC now, let's bring up the CAC itself. The French CAC certainly has put in there, or is putting in a potential right shoulder here and looking for a, well, not a right shoulder as such, but certainly is putting a higher low in and looking to break out of this bearish channel. So therefore you are looking at bullish price action. 60-minute chart, again, same pattern, double bottom is holding and therefore looking to potentially move higher. The daily chart, you are looking at fib 75% support and therefore you're looking to move higher. Although you do have this unfilled gap at the 4612, and therefore is vulnerable to that being closed. But my understanding is that we are moving higher. The FTSE itself, yes, you can be vulnerable to hitting the 6100 level. Given the fact that oil certainly has put in a potential bottom and is reversing higher, you are looking for stronger price action for the FTSE. The daily chart itself, yes, you are vulnerable to testing the 6100 level, but I do think that all the bearish news certainly has been priced into the market. The 10-minute chart at present, yes, you've put in a lower lows and lower highs, although you have put a potential pattern here. If we can hold that double bottom support at 6120, the FTSE is certainly set to hit the 6170 level and potentially higher. So again, watch that very, very carefully in terms of the FTSE itself. So you are looking at breaking out of this potential bearish channel here, although it is relatively weak. So again, keep an eye out for that. You have this falling, contracting wedge pattern and a breakout, and we did retest it, so therefore it's certainly a weak pattern. Given the fact that commodities have been hit hard, the FTSE, I did attempt to go long the FTSE at 6134. I've closed out for +6 because it certainly remains vulnerable to further fall. So again, something that you need to watch out in terms of miners. Okay, I think that's a market wrap for CFDs.com. Be sure to visit and certainly qualify for that additional offer. Safe trading, and let's see how the week goes. Goodbye.